Okay, dear students, first of all, welcome to everyone that you people have taken out time for today's live revision class for this PM session. And we are conducting these live revision classes for this upcoming attempt. And a little introduction by myself, and then I'll give you a quick idea what exactly we are going to cover. Myself, Abil Ahmed, CEO and Principal of Abil School of Accountancy, having teaching experience, mashallah, more than 20 years. Highest marks so far, one of my student, he has taken the highest marks in PM. They are 85. Let's see who is going to break this record in this attempt. Now exactly what we are going to cover in a live revision classes, that is very important. Number one, I'm going to conduct these live revision classes every Thursday till your exam, every Thursday 3 p.m. Pakistan time. That's number one. Number two, during these live revision classes, like today, we have taken multiple choice question from decision making, from ABC costing, from target costing. But these questions are from the Kaplan kit. In the coming classes, we will be taking questions, long questions, MCQs, section B questions from BPB kit. And then we will also be discussing the questions from Study Hub. So within these live revision classes, I will give you the flavor of almost every possible source of a study which is available for your PM exam, so that you should have an idea what sort of language each source is using it. Number one. Number two, it's a first live revision class, so will not be so long, but coming live revision classes, they're going to be seriously long. Third announcement, first live revision class of PM will be uploaded on our Abil School of Accountancy YouTube channel and other social medias. This class will be uploaded over there. But after that, from class 2 onwards, recording will only be available to our enrolled students. And I'll make sure that in coming live revision classes, number one, you will be getting a flavor of each and every available source of a study for PM. And one more thing, in the entire PM syllabus, is there any area which actually disturbs you? You can just send the message in your WhatsApp group, so that particular topic can be revised in a really good amount of detail as well. So that facility is also available, but you have to tell us that which area is actually disturbing you. So obviously the majority agrees on XYZ area or areas, so we can give more time to that area as well. So that is the complete agenda of these live revision classes, and I'm conducting these live revision classes for almost every paper. Before this class, I've already conducted one class on FM, FR, now it is PM, tomorrow is going to be taxation class. And for SBR, ATX, and AFM, we have already started the classes. So let's start. Relevant cost. Basically, when we say relevant cost, so relevant cost simply means the cost which will be affected by your decision. A quick idea. For example, the cost which has been incurred in the past, technically it's a sunk cost. Whatever decision you are going to make today, it will have no impact on the cost which you have incurred in the past. That is why we say past cost is a sunk cost which is irrelevant. Another thing, relevant cost cases relating to material. I'll be a bit quick to give you a review. For example, for XYZ contract, you need a material, and assuming you do have that material in your inventory. Number one, whatever price you have paid in the past to purchase that material, it is irrelevant. Second, I have to see if that material is in regular use. Then obviously current purchase price becomes relevant. If that material is not in relevant use, then I will see how many alternative uses are available. For example, one alternative use is I can just sell it for to get the scrap value. Second, if there's a possibility to use that material at the place of another material which might be in regular use. So when if number of uses are available for my existing inventory, existing material, then I will choose the option which gives me higher benefit. That actually becomes my relevant cost. So when you have XYZ material and there are number of ways to get the benefit, then I'll choose the one which gives me the higher benefit, and technically that becomes my relevant cost. I will not agree less than that. Just a quick idea. Now, what they are asking here, what is the relevant cost of materials for a spatial contract? So there is XYZ spatial contract, and we have to see what is the relevant cost for that spatial contract. Okay. You, and then again, you company has been asked to quote for a spatial contract. The following information about the material needed has been given. We have got original cost. Scrap value is 0.4 per kg, and we have got a replacement cost, which is 5.5. Okay. The contract requires how many kgs? $10. Contract requires 10 kgs of material X. There are 250 kgs of this material in inventory. You have got a lot, which was purchased in error over 2 years ago. If material X is modified at a cost of $2 per kg, it could then be used as a substitute for material Y, which is in regular use and currently costs $6 per kg. First of all, you should understand one thing. The material which you need for this contract, we do have that material in our, you can say, stock, and we have got in fact in bulk. Second, how many ways are available to get the benefit from our existing material? Actually, one way is, if you don't want to do anything, just sell it for $5 per kg. This is the one way to get the benefit, one of the ways to get the benefit from your existing material. Second, there's another way is also available. What is that another way? We can actually utilize existing material as a substitute of material Y. The good thing is material Y is in regular use. The material which is in regular use, the relevant cost is its current purchase price. Okay, now, in order to use our existing material as substitute for material Y, we have to bear the modification cost. We have to bear a XYZ modification cost of $2 per kg. Without incurring the cost of $2 per kg, I cannot use this material as substitute for material Y, which means that material Y, which is in regular use, is costing us $6 per kg. Costing us how much? $6 per kg. If we want our material X to be used as substitute for material Y, we have to bear the modification cost of $2. So after actually bearing the modification cost of $2, the net benefit I can get is $4. Now, logically, your existing material has got two uses. One, no need to do anything. Technically, sell it for $5, 0.5. Second, utilize your existing material as substitute of material Y, which is available for $6 per kg, which is in regular use. But in order to do that, you have to bear the modification cost of $2 per kg. So if I'm using my existing material as substitute of material Y, I'll get a benefit of $4 per kg. So obviously, I have two uses of my existing material. One is to sell it for 0.5, and second is to get the benefit of $4 per kg. So can I say logically I'll go for the higher one? And how many kgs we need for this special contract? 10 kgs. 10 multiplied by 4, it is 40. I strongly believe this MCQ is clear to everyone. You have a material which has got, let's say, two uses. Obviously, you will end up by charging special contract a cost where you are having a higher benefit. Let's move ahead. What is the relevant cost of the labor for a special contract? First of all, if your labor is having an idle time, if your labor is idle, and within that idle period, idle time, if you ask them to work, then obviously the relevant cost is zero. But if your labor is working at full capacity, and let's say replacement labor is not available, if your labor is working at full capacity, then relevant cost becomes whatever you pay to the labor plus the contribution loss. Because sometimes what happens that we ask our labor to stop the existing work and work on a new contract, then there is a possibility we might be having a loss of contribution on our existing contract. In that case, the relevant cost becomes whatever we make payment plus the contribution loss. Now let's see what is happening in this question. VV company has been asked to quote for a special contract. The contract requires 100 hours of labor. However, the laborers who are each paid $15 per hour are working at full capacity. Okay. So there's a shortage of labor in the market. So replacement labor will not be available. The labor required to undertake this special contract would have to be taken from another contract Z, which currently utilizes 500 hours of labor, generates 5,000 worth of contribution. Okay. If the labor was taken from contract Z, then the whole contract of Z would have to be delayed. This is important. You're going to earn the same amount, but with a delay. And such delay would invoke a penalty fee of $1,000. Now listen carefully. You are going to earn the same contribution from contract Z, which you were getting earlier. But due to the new contract, there will be a delay, and that delay will cause you a penalty of $1,000, which means that relevant cost will be whatever we are paying to the labor. This time it will not be contribution loss. This time it will be the cost of the penalty, because we will be getting the same amount which we were getting earlier. Only the delay will come, and due to that delay, we have to bear the penalty cost. If in the question there wasn't any penalty and nothing else was mentioned, then what relevant cost would have been whatever we pay to the labor plus the contribution loss on 100 hours. But right now, they're actually not bearing any loss in the contribution, but they have to bear the penalty cost due to delay of contract Z's completion. So logically, your relevant cost becomes $2,500. So I strongly believe that this is also clear to everyone. What is the relevant cost of 2000 kgs of material J to be included in the quotation? How many kgs? 2000 kgs of material J. In order to utilize some spare capacity, K is preparing a quotation for a special order which requires 2000 kgs of material J. K has 800 kgs of material J in inventory. Original cost is $7, which is irrelevant in fact, because whatever you have paid in the past technically is a past cost, sunk cost. Material J is used in the company's main product L. Each unit of L uses 5 kgs of material J, and based on an input value of $7 per kg of J, each unit of L yields a contribution how much? $10. Okay. The resale value of material J is 5.5. The present replacement price of material J. Present replacement price basically means your current purchase price is $8 per kg. Material J is readily available in the market. Now, this material J is also available. Now, we have to see that what is the relevant cost of material J. In order to utilize some spare capacity, K is preparing a quotation for a special order which requires 2000 kg. Okay. K has got 800 kgs of material J in inventory. Number one, we do not have entire 2000 kgs, we have got 1200 kgs. So it means we have got 800 kgs in inventory. So in any case, we have to buy the remaining 1200 kgs. So obviously 1200 kgs multiplied by whatever is the current purchase price, that is the relevant cost of your 1200 kgs. But now let's see what is the relevant cost for your 800 kgs. K has got 800 kgs for material J in inventory. Material J is used in companies which product? Main product L. We are using this in our main product. Each unit of L uses 5 kgs XYZ, it's okay. And it is generating this much, I would say, contribution as well. Now listen carefully. We are using this material is in our main product, which means that technically your existing material J is in regular use. And the material which is in regular use, either you have in your inventory or you do not have in your inventory, the relevant cost is the current purchase price. Obviously, I'm using this material in my main product, and which is giving us a contribution of $10 per unit. So simply, this material is in regular use, and the material which is in regular use will have is having a relevant cost is current purchase price. So 2000 into $8. Because examiner is not saying this 800 material is just there, we are not using it. You are saying I'm using this material in my main product, nothing else is mentioned. So simply it has the interpretation that this existing material is also in regular use. So obviously if the material is in regular use, relevant cost of your 800 kgs inventory is also the current purchase price, and 1200 obviously you don't have in your inventory. In any case, you have to buy. So entire 2000 multiplied by 8 gives you 16,000. So logically, the relevant cost is 16,000, option C. Now, what is the relevant cost of material for the contract? Question 4. Students, I want every one of you try to attempt this question. I'm just giving you 2 minutes, not more than that. You can easily do it. Don't forget the concept when your material is having more than one uses, then see where you have the more benefit. Where you have more benefit, that is actually becomes your relevant cost. Keep that simple concept in your mind and then attempt this question. You have just 2 minutes. Please, I want everyone to attempt this. Let's students try together. What is the relevant cost of the material for the contract? A company is calculating the relevant cost of material to be used on a particular contract. The contract requires 4,200 kgs of material each. This can be bought for 6.3 per kg. So the inventory, the material which you don't have in your stock, you have to buy from outside, and per kg relevant cost is 6.3 for the material which you don't have in your inventory. The company bought 10,000 kgs of material sometimes ago for paying how much? Logically, 4.5 is irrelevant. Past cost and cost, irrelevant. 4.5 is irrelevant. Currently, how many kgs we have? 3,700 kgs for this remaining in inventory. It means we need 4,200 kgs. Out of that, in inventory, we have got only 3,700 kgs. So how many kgs in any case we have to buy? 500 kgs if I'm not wrong. And 1 kg will cost you 6.3. So 500 into dollars, 6.3. I'm having a relevant cost here. Any answer by the students? Okay, yes, 3150. Now come here. Currently, 3,700 kgs of this remains in inventory. The inventory of material H could be sold. If you want, you can sell it at 3.2. So 3,700 into 3.2, 11,084. So one way to use 3,700 kgs is you can sell it. In that way, you will be getting $3.2 per kg. Okay, let's see. Do we have any other use or not? The company has no other use of material H other than on this contract, but it could be modified it at a cost 3.7 per kg. Use it as substitute of material J. Material J is regularly used. The material which is in regular use, the relevant cost is its current purchase price by the company can be bought for $7.5 per kg. Now there's another use of your existing 3,700 kgs is available. We can use this as substitute of material J. Now let's see. 1 kg of material J is having a cost $7.5 per kg. In order to use your existing material as substitute for material J, you have to bear the modification cost 3.7 per kg. Let's see how much benefit I can get by bearing a cost of 3.7. So 7.5 minus 3.7 gives me 3.8. Now, please, if you're doing nothing, you can sell your existing inventory and get a benefit of $3.2 per kg. But another way is use this as substitute for material J and get the benefit per kg 3.8. So obviously, using my existing material as substitute for material J, I'll go for that because that gives me a higher benefit rather than this one. 3,700 into 3.8, I'm getting 14,060 plus 3,150 plus 3,150. Students, I'm getting 17,210. I strongly believe it is very clear, very much clear to everyone. Same concept when I've got more than one way to get more than one ways to get the benefit from my existing inventory. I'll see where I can get the higher benefit, where I can get the higher benefit, where I can get the higher saving. That becomes my relevant cost. Let's go ahead. Okay. What is the relevant cost of using the machine on the new project? We read the requirement again. What is the relevant cost of using the machine on the new project? Let's see. ACE Limited is considering a new project that will require the use of a currently idle machine. That will require a use of currently idle machine. The machine has current book value 12,000, a potential disposal value 10,500 before $200 disposal cost. It means that if you don't want to do anything, sell it, and logically you will get 10,300. Why 10,300? Because when you will be selling it for 10,500, you have to bear the cost of $200. So your idle machine is there, you're not doing anything, sell it. By selling, at least you will be getting $10,300. And hence has been undertaken depreciated by 1,500 over its life to date. Depreciation is not relevant. If the machine is to be fit for the purpose of new project, it will have to be relocated at a cost of $500 and refitted further cost 800. Technically, you have to bear a sort of, you can say, modification cost, because without that cost, without that additional cost of 500 and 800, you will not be able to use your existing machine for this new project. It means we have to bear the relocated cost of $500 and refitted and further cost of $800. Altogether, because of this machine, you have to bear additional cost 500 plus 800. So logically, the relevant cost of my idle machine will not be 10,300 only. It would have been 10,300 only if there wasn't any, I would say, additional cost. So 10,300 is my cost, but it is not the only cost of this machine relevant for the new project, because I have to bear additional 1,300 as well. After bearing additional 1,300, because of this project, I will be able to utilize my existing machine for the new project, which means that logically altogether the relevant cost becomes 11,600. So the relevant cost is 11,600. Let's see. Question from the student. Okay. For a new project, we need a machine. We don't need this machine for 2 months, 3 months. We need a machine for the new project. My first question is, if you don't have any machine, then what are you going to do? Will you be buying the new machine? Yes or no? Please answer on this first. Yes, great. Obviously, we are going to buy if you don't have any machine. Great. Now the company is thinking that we have got an idle machine and that could be used for this project. Okay, if I have an idle machine which could be used for this project, what is the relevant cost to my existing machine? So number one, if we are not using our idle machine at all, I can sell it and I can get $10,300 by doing nothing, just by selling my existing idle machine. I can get $10,300. So in any case, if I use my existing machine for the new project, at least $10,300 is my relevant cost. At least. First of all, tell me, is this clear about the explanation about 10,300? Yes or no? Great. Now the issue is we are unable to utilize an idle machine in its existing, you can say, condition. In order to utilize our existing idle machine, we have to relocate the machine. We have to relocate. Of course, I'm going to relocate this because of the new project. That is why the $500 relocation cost becomes relevant. So only 10,300 is not relevant. That relocation cost is relevant also because I have to bear this because of this new project. And only I cannot stop at 500. Then I have to bear refitting a further cost of $800. Obviously, if I'm not going to refit the machine, how can I utilize it? So logically now try to understand, in order to use your existing idle machine for the new project, you are not selling it, so you have an opportunity cost of $10,300, which is relevant. Second, to utilize your existing machine for the new project, you have to bear additional $1,300 cost. So logically, 10,300 is my opportunity cost, plus I'll be bearing additional cost of 1,300. Altogether, my relevant cost becomes 11,600. Okay, that's clear. Great. Okay, now, what is the overhead to be charged to the project? Blunt is considering a new project but is unsure how much overhead to include in the calculation to help him decide whether or not to proceed. Existing fixed overhead are absorbed at a rate of 8 per hour. Blunt is certain that the project will involve an incremental 500 labor hours. First of all, your existing FOH becomes irrelevant. In any case, you have to bear this. The project will involve extra machine running costs, extra machine running costs. And these variable overhead cost is $4 per hour. Extra machine running cost, variable overhead, $4 per hour. The number of extra machine hour is expected to be 450 hours. Variable overhead is always relevant. Variable overhead is always relevant. Plus, the difference between this figure, the 500 labor hour above is 500 is idle. The difference between this figure and 500 labor hours above is expected to be idle time. So mainly 50 hours are idle. So obviously we are just taking variable overheads. Okay, one student is currently at the office. Yeah, these lectures will be uploaded on our LMS, plus they will be uploaded on our YouTube channel as well. First lecture will be uploaded, but after that, all the lectures recording will only be available to our enrolled students. Okay, you carry on with your office work, no issue at all. Thank you very much for coming around for 45 minutes. The project will require a little more temporary space, can be rented at a fixed cost, 1,200 for the period of hire. This overhead is not included in the fixed, so additional overheads. If I'm going to bear any additional overheads because of the project, then obviously relevant. So let's see what is I need to use a calculator. Variable overhead is relevant. Additional rental cost is obviously relevant. So students, I'm getting $3,000. $3,000. I hope it is clear to everyone. Okay, answer. Okay, that's great. Okay, students, what is the relevant cash flow? I'll give you one hint and then I want everyone to attempt this. If you have the number of options to do the same job, to do the same work, if number of options are available, then always remember, according to the relevant cost, you will choose the option where you have to bear the minimum cost. Actually, relevant cost means minimum cost. Repeat. If to do the same job, we have the number of alternatives, then logically I will opt the alternative which has the lowest cost, which is having a lower cost. Let's try this now. Clever Clocks is short of labor for a new one-off project. Okay. Needing 600 hours of labor and has a choices. If I've got choices, I'll choose the one where I'm going to bear the minimum cost. As way to source this, they could hire new people temporarily from an agency at a cost 9 per hour. So 600 into 9 gives me $5,400. This is option 1. But then only, okay, no, per hour. Okay. Alternatively, they could recruit new temporary staff at a fixed advertising cost, fixed cost 1200, but then only 7 per, then only pay 6 per hour for the time. How many hours do we need? 600. 600 into 6. 3,600 and plus 1200. Just a minute. Another option is 4,800. Okay. They could also redirect some staff from existing work who are currently paid $7 per hour and who make sandals that generate a contribution 3 per hour after all variable cost. Sandals are all good selling product and Clever Cloaks will lose the production and related sale whilst the staff is working on the when your existing staff is at full capacity and you want them to work for a new contract, and let's say existing work has to be stopped and you have to bear the contribution loss as well, then relevant cost becomes whatever you pay to the labor plus the contribution loss. We are paying to the labor $7 per hour plus the contribution loss will be $3 per hour. It means the cost becomes $10 per hour. If you want your existing workers to work, you have to bear the cost of $10 per hour. It becomes $6,000. Logically, I'll go for the second option. So that is, so concept is very simple. Let me repeat. If to do the same job, number of alternatives are available, then we will choose the one where we have lower cost. So I strongly believe this is clear to everyone. Okay. Now let's see. ABC. Okay. A company produces a range of products and uses an absorption costing system. Fine. Which two of the following are unlikely to be a consequence of the company switching to an activity-based system? You have to tell us which two of the following are unlikely to be the consequence of company switching to ABC. Let's see. Indirect overheads will be shared between products on a fair basis. Can I say that will be the consequence? Actually, the biggest, you can say, difference between absorption and ABC is there's a ABC claims that ABC is having a claim that we actually tell you we will give you the fairer overheads allocation. So obviously the first is the consequence, and we have to find out which are the two unlikely to be consequence. Product pricing decision will be improved. Yes. Let me do this. This is true. This is also true. Of course, your decision making, pricing decision will be definitely improved because you will be exactly knowing the true overhead to be charged to the product. Then it will definitely help you in deciding the selling price. The prime production cost of each product. Ooh, 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 ooh. Can I say false? Actually, when you say prime cost, so logically, your prime cost does not have the effect of overheads. It's direct material, direct labor, and if there is any direct expense, if you add them, that becomes your prime cost. Prime cost is the major cost, and it has maximum, it will have the three components: direct material per unit, direct labor per unit, and direct expense per unit. So prime production cost does not have the impact of overhead. So how can you say that uh, the prime production cost of each product will fall due to ABC? It has nothing to do with ABC. That is why false. It is not the consequence of ABC. Cost control on indirect overheads will be harder to achieve. Can I say false? Logically, it becomes easier to achieve. Why it becomes easier to achieve as compared to absorption? Because under ABC costing, you will be exactly having the information that what actually causes overhead cost to be incurred. Then it becomes easier in ABC to control the cost as compared to absorption. They are saying something else. They're saying cost control indirect overheads will be harder, will be easier in ABC. Total production cost of each product will change. That is a consequence. Definitely under ABC, overheads per product will not be same as compared to absorption. So logically, the answer is this one, third and fourth. They're not the consequence of, they are the unlikely consequence of ABC. Okay. What are they asking? What is the inspection cost per unit of product alpha? What is the inspection cost per unit of product alpha? Select from the list below. A company which makes two products, alpha and zeta, using activity-based costing to absorb its overheads. It has recently identified a new overhead cost pool. New overhead cost pool for inspection cost and has decided that cost driver is the number of inspection. So they have given you the cost driver, the reason to incur the cost, due to basically number of inspection. We bear the inspection cost, which is very much logical. Total inspection cost is $2,000 or 2,50,000. If we have the total inspection cost 2,50,000, if we know the total number of inspections, that will actually give you the overheads per inspection. But we actually need something else. We need what is the inspection cost per. Okay. Production volume. Alpha is having 2,500 units. Zeta is having 8,000 units. Machine hours per unit. Units per batch. Alpha is having 2,500 units. one batch contains 500 units. It means when the production of alpha starts in batches, so one batch is equal to 500 units. Zeta, one batch is equal to 1000 units. We do not have inspection per unit, we have inspection per batch. We do not have the inspection per unit, we have the inspection per batch. Now, students, alpha, total number of units are 2500. One batch is having 500 units. It means 2500. 2500 divided by 500, of course, gives me 5. So logically, to produce 2500 units of alpha, how many batches, number of batches will be 5. This is number of batches. We have got inspection per batch. 5 batches means per batch the inspection is 4 times. 5 multiplied by 4 gives us 20. Total number of inspections, in alpha, they will be 20. Now let's talk about beta. 8000 units per batch, we have got 1000, it becomes 8. So how many batches we will be producing in zeta? In zeta altogether, we will be producing 8 batches. Per batch, the number of inspection is 1. So 8 into 1 is obviously 8. So to manufacture 8000 units of zeta, total number of batches, they will be 1, and total number, they will be 8, and total number of inspection is a coincident that they are also 8, because inspection per batch is only 1 time in case of zeta. So the total number of inspections are 28. Total number of inspections are 28. It means 2,50,000 divided by 28. That will actually give you the inspection cost. That will give you the inspection. That will be the inspection cost. Let's see. Per batch. That will be the inspection cost per batch, because total, that will be the, okay. Each time the inspection cost which we will be bearing. So this is cost per inspection. This is the cost, overhead cost per inspection. Overhead cost with a little bit rounding of, you can say 8929. This is per inspection. Repeat. This is per inspection. Okay, fine. It's not the answer. They did not ask us how much cost we bear per inspection. They're asking something else. They're asking us what is inspection cost per unit of product alpha. Inspection cost per unit of alpha. Okay, no issue at all. $2,500 units of alpha. Actually, they need total inspection. How many times? There will be total inspection. How many times? 20 times. To manufacture, to produce 2500 units of alpha, total number of inspection will be 20 times. So 8929 to 20 will give you the total inspection cost of alpha. for 2,500 units. Now, very easily we can calculate per unit. 8929 multiplied by 20 divided by 2,500. Students, I'm getting $7.71.432. If you do not get the exact answer, then always go for the closest one. Let me repeat. 8929 is overhead cost per inspection. 2,500 units of alpha. They need total inspection 20 times. Per inspection cost is 8929. So simply 8929 into 20 will give us the total inspection cost for 2,500 units of alpha. So very easily we can calculate the cost per unit. That what is the cost of inspection per unit? 71.432. Now let's see. Students, Charlie is the answer. Well, this is the obviously closest one. So I strongly believe it is clear to everyone. Yes or no, please repeat. Or student can do one more thing. Per inspection, it is 8929. Per inspection, it is 8929. One batch needs how many inspections? 4. And one batch is consist of how many units? 500. You will get the same result. You can see this. Per inspection cost is 8929 per inspection. The cost is 8929. One batch needs inspection 4 times. So 8929 into 4 will give you the inspection cost per batch, then divided by units in one batch, which is 500. So obviously it is up to the student how they are approaching the question. I hope it is clear in both the ways. Please reply, students. Okay. Which of the following statements are true regarding A, B, C, and cost drivers? We know that cost driver is the reason to incur the cost. Which of the following statements are true? Obviously, one more than one will be true. They are not saying is true, they're saying are true. Okay. A cost driver is any factor that causes a change in the cost of an activity. Can I say true? Because cost driver is the reason to incur the cost. For long-term variable overhead, cost, the cost driver will be the volume of activity, which is again true. You're not talking about short term. You're saying for long-term variable overhead cost, the cost driver will be the volume of activity. And let me tell you one thing. In the long run, nothing is fixed. In the long run, nothing is fixed. Traditional absorption costing tends to under allocate overhead cost to a low volume products. That's again true because traditionally what happens, we allocate overheads on the basis of, you can say, volume. Now there's a possibility that XYZ product which is having a low volume of activity will have a low cost, will have a low overhead allocation. Traditionally, it happens. Traditionally, absorption costing tends to under allocate overhead cost to a low volume product. So all are true. So the option D is the result. Option D. Now, Let's try. Using activity costing per unit A, give your answer to the nearest. Okay, this is a different question. Let's say there's a box. Fine. A company makes products A and B. It is experimenting with activity-based costing. Production setup costs are $12,000. Total production will be 20,000 units of each product A and B. Each run is 1,000 units for product A. Simply one batch of A, in one batch of A, we produce 1,000 units of A. And B is having, it means one batch of B, we have 5,000 units. Using activity-based costing, what is the setup cost per unit of A? Give your answer to the nearest sense. So students, production setup cost is $12,000. Total production is 20,000 units of each product A and B. Each run 1,000 units of A and 5,000 units of B are manufactured. So when you bear one-time setup cost, then within that you produce 1,000 units of product A and you produce 5,000 units of product B, which means that how many setups of A and B we have to, how many times setup cost we have to bear in case of, for producing 20,000 units, product A. Per setup we bear the, per setup we manufacture 1,000 units. So for 20,000 units, to produce 20,000 units of product A, we have to bear the setup cost 20 times for product A. For product B, 20,000 divided by 5, we will bear the setup cost 4 times. Okay. So 12,000 divided by 24, that will give us the setup, that will give you the per setup cost. Students, per setup, the production setup cost per setup is $500. This is per setup. And when there's a production run, in one run, we manufacture 1,000 units of product A. You can say per setup, we manufacture 1,000 units of product A, and per setup, the cost overhead is $500. So 500 divided by 1,000, logically it is 0.5 per unit. Repeat what I did. First of all, we have calculated total number of runs. You can say total number of setups. There are 24. Then we calculated per setup cost, which is 500, and per setup, we manufacture 1,000 units of A. So per setup, the cost is 500 divided by 1,000. That gives us per unit setup cost of product A. I strongly believe this is clear to everyone. Otherwise, the other way also. What is the other way? Product A, per setup, you will bear the setup cost $500. How many times you have to bear the setup cost in order to manufacture 20,000 units of product A? You have to bear the setup cost 20 times, which means 500 into 20. That will give you the total setup cost for product A to manufacture, to produce 20,000 units. Then divide this by 20,000. Definitely you will get $0.5. So again, it is up to the student how you approach a question. I strongly believe this is clear to everyone. Which of the following statement is or are true regarding ABC? Okay. A cost pool is an activity which consumes resources and for which overhead costs are identified and allocated. That is true. Basically, what is the concept of cost pool? When you are doing the same activity again and again, obviously you have to bear the cost. So aggregated cost of doing the same activity again and again, for that we prepare a cost pool. So cost pool is an activity, yes, which consumes resources, of course, for which overhead costs are identified and allocated. Like we have just done that. We exactly knew in the previous question how much inspection cost to be allocated to, let's say, product A total, and how much total inspection cost should be allocated to product B. So cost pool is an activity, okay, that's which consumes resources for which overheads are identified. That's true. An activity-based costing overhead absorption rate is calculated in the same way as an absorption costing overhead and will result in the same overhead absorption rate being calculated for each cost pool. That's not true at all. Read it again what they are saying. An activity-based costing overhead absorption rate is calculated in the same way as an absorption costing. Actually, you will not have the same result because each cost pool will not have the same amount of cost. So actually, you will have a separate overhead absorption rate for each cost pool. For example, the setup cost is different. So there will be a overhead absorption rate per setup will be different as compared to overhead absorption rate per inspection. So how it is possible to have the same overhead absorption rate for each cost pool? It is not possible. Like we did two questions, for example, where in one question we have actually calculated overhead absorption rate per inspection. Then actually we have previously we have calculated overhead absorption rate per setup. So basically, each cost pool will have a different overhead absorption rate. It will not have the same overhead absorption rate. So the question is, which one is correct? One is true, another is false, and they're asking us just true. So can I say only one? What is the setup cost per unit of product B to two decimal places? Again, there is a box which you have to deal with that. A company uses ABC activity-based costing to calculate unit cost of its products. The figure for period 3 are as follows. Production setup cost is 84,000. Total production is 40,000 units of each product A and B each run. In each run, we manufacture 20,000 units, 2,000 units of A and 5,000 units of B. And they're asking us setup cost per unit of B. I think this should be easily done. First, let us calculate total number of setups. So 40,000 divided by 2,000. 20 times for A. 8 times for B. So altogether, number of setups will be 28. So logically, 84,000 divided by 28. Logically, 84,000 divided by 28 will give us per setup cost. So 84,000 divided by 28 Per setup, I'm getting 3,000. This is per setup. In each setup, how many units of product B we manufacture? 5,000. Per setup cost is $3,000, and each run we manufacture product B, how many units? 5,000 units. So 3,000 divided by 5, it will give you $0.6 per unit of product B. Repeat, per setup, per setup, per setup, the cost is $3,000. And in each setup, we manufacture 5,000 units of product B. There's another way to deal with that also. Per setup cost is $3,000. In order to manufacture 40,000 units of product B, we have to bear the setup cost how many times? 8 times. And how many units we are producing? 40,000. So to manufacture 40,000 units of product B, you have to bear the setup cost 8 times. Let's see, 3,000 into 8, you will get 24. 24 divided by 40,000. Definitely we have the same result, $0.6. Again, it is up to the student to deal with, to solve the question on just per setup basis, or to take the total cost of the setup and divide by total volume of product B. Okay, what are they asking? We do not have the options. Again, there's a box, I believe. Using a traditional method of overheads absorption based on labor hours. What is the overhead cost per unit for each unit of product alpha to 2 decimal places? Fixed overhead total is 4,20,000. Budgeted overhead is 4,20,000. We just need budgeted activity level. And normally for absorption costing, they have either labor hours or they use machine hours. Any one of them they are using. Here they are using labor hours. We just need total labor hours. Direct labor hours, alpha takes 5 hours, beta takes 5. Annual output 12,000, 1,200 and 12,000 units. It means 1,200 into 5 plus 12,000 into 5. We are having total labor hours 66,000. Which means that 4,20,000 divided by 66,000. I'm getting 6.3636 per labor hour. FOH rate. Using traditional method of overhead absorption rate on labor basis. What is the overhead cost per unit of each unit of product alpha? Each unit of product alpha needs how many labor hours? 5. Per labor hour, overhead is 6.3636 into 5. This will give you per unit. So 6.3636 into 5. The students, I'm getting 31.818. Or how many decimal they're asking? 2 decimals. So make it 31.82 with a little bit rounding off. 2 decimal. So just go for 31.82. I hope it is pretty much clear to everyone. Okay, target costing. In target costing, which one of the following would be an appropriate strategy to reduce a cost gap? Actually, we decide the desired selling price. From that desired selling price, of course, we decide the selling price. How do we decide the selling price? First, in target costing, there will be a research. On the basis of research, we get the selling price from the market, because we know that we won't be able to sell it for higher than that price. So logically, we get that price from the market in case of target costing. Then from that selling price, we actually deduct, you can say, the target profit. Selling price, you have decided after doing the research, you have taken the selling price from the market. After that, you will deduct the desired profit, which is a target profit. Then you will get a target cost. Then we try our best to manufacture the product in that which has the cost equal to the target cost without, of course, compromising on quality. If you compromise on quality, then there's no benefit. Even you produce at a lower cost, nobody is going to buy it. So cost gap is the difference between the target cost and your production cost, your estimated production cost. Assuming estimated production cost is $40 and the target cost is $35. So there's a gap of $5. So your estimated cost minus target cost gives you the cost gap. Now let's read. In a target costing, which one of the following would be an appropriate strategy to reduce a cost gap for a product that existed in a competitive industry with demanding shareholders? Students, you cannot increase the selling price. Why? Because when you are following target costing, it means logically you have taken the price from the market. How can you increase the selling price? Your product will not be able, you won't be able to sell the product. So logically, the point number one will not reduce your cost gap at all. Okay. Then it says reduce the expectation gap by reducing the. Why would I reduce the selling price? When I've taken the selling price from the market, I know that how much customer can pay us. So why would I reduce the selling price? And by the way, if I reduce the selling price, how it is going to reduce my cost gap? Reducing the desired margin on the product. Why would I reduce the desired margin? Machinizing the production in order to reduce average production time. That is true. Actually, when you are machinizing the production in order to reduce average production cost, if you can reduce your average production cost, that will actually reduce your cost gap. If you can reduce your average production cost, that is going to reduce actually what? Your cost gap. Okay. Maximum rate per hour to 2 decimal. What they are asking, let's read. The maximum rate per hour to how many decimals? 2 decimal. If labor is the only other cost and 2 hours are needed, what is the most business can pay per hour if the cost gap is to be avoided? Can I say to avoid the cost gap, two things should be equal. One, your estimated production cost should be equal to the target cost. Then obviously there will be no cost gap. Let's read. The predicted selling price for the product has been set at 56 per unit. This is your selling price. The desired markup is 25%. Markup is a percentage of cost. Markup. Cost plus profit is equal to selling price. In case of markup, the cost is 100%. Here, profit is 25. Logically, your selling price will be 125%. In case of margin, cost plus profit is equal to selling price. If examiner says margin, then your selling price will be 100%. Assuming this is 75, then it will be 25. But here, we are dealing with markup. Okay. Your predicted selling price has been set how much? 56 per unit. The desired markup is on cost 25%, which means that 56, 100 upon 125 will give us target cost. Logically, from the selling price, if you deduct the desired target profit, you will get the target cost. Students, I'm getting target cost 44.8. And the material cost for the product is estimated to be $16 before allowing for additional material to allow for shrinking 20%. For every 10 kg of material going, only 8 kg comes out. Now, please try to understand. We bear material cost of $16, but this $16 per unit is before. You can say before a normal loss of 20%. Whatever goes as input, only technically 80% comes as an output because there's a normal loss of 20%, which means that material cost, logically 16 material cost is representing 80%. And we actually bear cost 100% because 20% we have to bear the loss of material. Because when 10 kgs they go as input, output comes only 8 kg. So this $16 per unit is representing 80%. But we bear the cost actually 100%. So students, I'm getting $20. Logically per unit, direct material cost is $20. If the labor is the only other cost, so other cost is only the labor, how much labor cost we should be ready to bear in order to avoid cost gap? Now listen. Labor cost 44.8 minus 20 actually will give you 24.8. So we should be ready to bear the labor cost 24.8, but this is for 2 hours. Why 2 hours? Because 1 unit of this product takes 2 labor hours. An examiner has not asked us the cost of 2 hours. Examiner is asking the maximum rate per hour, which means that, can I say 12.4? So let me take the question as well from the student. Okay, there was a question. All these questions are from Kaplan Kit. All these questions are from Kaplan Kit. As I mentioned earlier, every day we'll be using a different source of material. Like one day we'll be using BPP, then we'll be using Study Hub as well. So that I can give you the flavor of, in a very short period of time, I can give you the flavor of each source of material which is available for your preparation. Okay, now. Which of the following technique is not which of the following technique they are saying is not relevant to target costing? Actually, what do we do in target costing? As I mentioned earlier, we do research, then we take the selling price from the market, then we decide the desired profit, then we get actually target cost, then we estimate our cost, then we get to know the cost gap, then we try our best to put these strategies to utilize the strategies, to take the action to reduce that cost gap. So logically, even before the cost gap occurs, we try to do everything in advance. So which of the following techniques is not relevant to the target cost? Number one, value analysis is obviously very much relevant. For example, if my product is having any non-value added features, I will simply eliminate them. Is this clear to everyone? When it says again, the same thing, functional analysis, very much relevant. Obviously, I will just take the features against which customer is ready to pay. I will also consider the activity analysis, but actually variance analysis is irrelevant. Why irrelevant? Students, variance analysis, either it is an adverse variance or a favorable variance. It has occurred. After that, we say, okay, now let us take the action so that this should not happen in the future. But variance analysis means there's a feedback control. Logically, here we need to use the feed forward control rather than feedback. So variance analysis is not relevant in target costing environment. Okay, what are they asking here? What is the target cost for each unit of Sigma for the coming year? Select from the list as appropriate. What is the target cost? The selling price of product Sigma is set to be $250 for each unit. And sale for the coming year are expected to be 500 units. That's a selling price. Okay. The company requires a return 15% in the coming year on an investment. Okay, fine. A return on investment. The amount of the investment is $250,000 into 15%. This is what we need that our investment should give us. 250,000 into 15%. I'm getting 37,500. Okay. In the coming year, how many units we are expecting that we are expecting to produce? 500 units. That will give you a target profit per unit, 75. Per unit. Per unit selling price is 250. If I deduct my target profit, so 250 minus 170 minus 75. 250 minus 75 gives me 175. This is my target profit. So simply 175. What I did, I've calculated the return on investment amount. Then I'm going to produce 500. I'll be selling 500 units. So per unit, I should be generating 75. I'll be selling it for 250. So I should be producing this for within 175 USD in order to get the profit of 75 per unit. Okay. Which of the following describes the characteristics of services provided by an optician at VC company during a standard appointment? VC company is a company of opticians. It provides a range of services to the public, such as eyes test and contact lens consultation. Has a spare dispensary selling glasses and contact lenses. Patients book appointments with an option in advance. Optician in advance. Okay. A standard appointment is 30 minutes long, during which an optician will assess the patient's specific requirement, provide them with an eye care services they need, and it happens. After the appointment, patients are offered the chance to buy contact lenses or glasses from the dispensary. Now they are asking which of the following describes the characteristics of services provided. Can I say tangible? No. How can they be tangible? Homogeneous is not possible. Always remember one thing. Basically, when if you are in a service industry, you won't be providing the same services all the time in the same way. Every time there will be a change. If you visit to the same doctor again and again, you will find that every time that doctor has not given you the same amount of time. Every time the doctor has not given you the same attention, and it's natural, it happens. How can you say non-perishable? Services are perishable, you cannot store them. Simultaneous, that makes sense. Because what is happening, you're just getting the services. And when you are getting the services, you are consuming it. Simultaneously, it is happening. So when you are paying visit to an optician, they are just assessing you, they are checking your eyes, and they're doing each and everything. So simultaneously, you are getting the benefit as well, and you are actually consuming their services. So logically, D option. Okay, let's go ahead. Okay, match the stages. Match the stages required to correct step number to describe the sequence used when operating what? Target costing. We know that in target costing, there will be a research. There will, obviously, you are not going to research on anything. There will be a proper concept. There will be a, you will are going to develop the product concept first, then decide the selling price. Let's see how many options they are giving us. Cost the product, no. Profit margin, no. Set the selling price, use functional value analysis, no. Identify the, this is your number one. First of all, develop the product concept. That is number one. Now we'll go for the selling price. Then I will decide what profit margin I need. Once I have decided what profit margin I need, then obviously I can easily calculate target cost. Is there any, have they written any target cost? Okay, cost of the product, I'll go. Once I know the cost of the product, I can identify the cost gap. Then I'll be working on functional and value analysis. I'll be just considering all those features to which my customer is actually assigning the value against which my customer is willing to pay me. So students, today we have discussed the multiple choice questions on relevant costing, ABC, target costing as well. Obviously, it's a first live revision class, so it's not very long. But every Thursday, inshallah, till your exam, we'll be having live revision classes. And coming Thursday, the duration of the class will be long. At least you should be mentally prepared. The timing, duration will be around 3 hours at least. Could be longer than that. Otherwise, at least 3 hours. And we'll be using a different source of material so that you should be, and then we'll be also discussing pre-seen mock as well. Don't worry at all during these live revision classes. So thank you very much that you have taken out time to attend today's class. And this class will be uploaded on different social medias, including our ASA Abili School of Accountancy YouTube channel as well. The name is Abili School on YouTube. But after that, class number 2 and onwards classes will only be available to our enrolled students. So student, this is the last minute of the class. Is there anything you want to ask, you want to share before I end the class?